Hi, everybody. Thanks for joining me. Before we get started, I'd like to ask you to hit subscribe to my channel to keep up with all of my latest investing and personal finance content. And please check out the link you see on your screen for a message from our sponsor, The Motley Fool, where you can get the 10 best stocks to buy right now. So I buy most of the stocks that I own with the goal of holding them forever. But in reality, things happen. Companies get bought out, stocks, don't do what you think they're going to do, and for one reason or another, you end up selling them. So in reality, I'll probably only end up holding a small percentage of my stocks for decades. Now, some are more forever stocks than others. Just to kind of give some examples out of my portfolio that I consider stocks that I'm likely to still own in 20 or 30 years, just a list right there: Digital Realty Trust, ticker symbol DLR; Howard Hughes Corporation, HHC; American Express, AXP; Realty Income, ticker is O; Public Storage, ticker is PSA; Walt Disney Corporation, ticker symbol DIS; and MetLife, ticker symbol MET. So the thing that all these have in common, they're generally timeless businesses. They've all been, for the most part, well established, and there's little possibility that they're going to fail in the next few decades. So some of my favorite forever stocks in my portfolio have been beaten down tremendously in the recent market downturn. Four in particular look really attractive right now to me, based on a combination of my likelihood of holding them forever, the current discount as I perceive it, and the long-term potential to beat the market and really create generational wealth over the next few decades. So, with that, in no particular order, my number one to buy right now is Amazon. Amazon, believe it or not, is down 50% from its recent highs. It is a massively powerful business. It's trading for a market cap of less than $1 trillion for the first time since over 2 years ago, and it's really rare to find a company that is dominant in two different industries like Amazon is. Uh, we all know for its dominant e-commerce presence. Most people reading this have gotten a package from Amazon within the past week. E-commerce makes up less than 15% of retail sales in the US, and that percentage is even lower for some key markets overseas. It also has a dominant presence in the cloud services market through its Amazon Web Service or AWS platform. The cloud service market is expected to more than triple to a $1.6 trillion industry by 2030. So even if Amazon just keeps its market share in both of those industries, it could be a pretty big success over the next couple of decades. So number two is a business called Markel. This is one you might not be familiar with. Markel, at its heart, is an insurance company. It uses a very similar model to Berkshire Hathaway and is often called Baby Berkshire. And it's pretty easy to see why. It does have a profitable insurance operation. It's generated nearly $500 million of underwriting income just from insurance over the past 3 quarters. Markel does what mostly specialty insurance, things that don't fit in the wheelhouse of a typical property casualty insurer. Just for example, when I needed an umbrella policy for rental properties, it was underwritten by Markel. The stock's down 20% from the highs, which might not sound like a lot in today's market, but this is a stock that rarely goes on sale, and this seems like a great opportunity to give it a closer look. Number three, a company called Walker and Dunlop, the smallest of the four on this list, ticker symbol WD. Walker and Dunlop is growing into a leader in commercial real estate finance. They have several different business lines. They originate loans, they service commercial loans, they have a commercial property sales division, they do commercial real estate investment banking, and it's a very fragmented business. Walker and Dunlop still has less than a 10% share of its core multifamily market, a much smaller market share when you consider all of commercial real estate. And it really has ambitions of growing into a dominant leader in commercial real estate finance. And it has kind of the visionary leadership that can take it there. It's already more than 10x in just 12 years as a public company. It's been around since the 1930s. Current management has only been at the reins for about 15 years now and has been doing a fantastic job. The stock's down 50% from its highs, pretty much because of general pessimism in the real estate market. And to be fair, it might be a slow year or two in commercial real estate, but the long term potential here is just tremendous. And with the stock down 50%, it seems like a great buy right now. Bank of America is number 4. This is one that I've talked about several times recently. It's down about 28% from the highs right now, mostly on just general economic pessimism. Um, when recessions come, which is kind of widely expected in the next year or so, when recessions come, more consumers run into trouble paying their bills. Inflation and rising rates can really hurt loan demand, which is a company that lends money primarily. That's not necessarily a great thing. But Bank of America also stands to benefit a lot from rising interest rates. Bank of America estimates that every 100 basis point shift in the yield curve will result in $4.2 billion of annual net interest income for the bank. We've already seen this reflected in the numbers. The bank is very, very profitable, and the management team has done just a tremendous job of kind of pivoting from the financial crisis era Bank of America to really prioritizing smart capital allocation. Buybacks have been a big priority, capital return, things like that, and investment in technology. A lot of people are kind of surprised when I put Bank of America on a list of my favorite fintech or financial technology stocks, but it's for good reason. It has a top rated banking app, probably the most functional that I've used. It's got a great investment platform in Merrill Edge. It's really investing in technology and really kind of fighting off the financial disruptors really well. And it's one that I think is going to be the winning big bank over the long term out of the current big banks. So hopefully you enjoyed this on the 4 forever stocks that I see as great opportunities right now. I'd love to hear what you think about them. Please leave me comments. I'll do my absolute best to respond to every single one individually. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.